Good afternoon, everyone, and thank you so much for joining us for our Meet the VC today. Today, we have a fantastic event planned for you with Charles McCormick of McCormick O'Brien, who's also a VC at another partnership. Per usual, we are going to go through today. Obviously, I'm your host. My name's Gina. I was with Early Growth back in 2013, left briefly and came back in March of 2021. I have an events background and been most recently running virtual events. For all the other webinars, today's webinar will run about 40 to 60 minutes long, depending on our question and answer. You can always ask your questions at any time in the question and answer panel, and we'll get to them as soon as we find applicable or towards the end of the event. But during this time, obviously, feel free to chat amongst each other. Right now, drop your name, company information, where you're from in the chat, get to know each other and really engage today. We're hoping our VCs will engage with you as well. The event is being recorded. If you have to leave at any point during today's event, you can always find it on our YouTube channel. It'll be available later this evening. About Early Growth. Most of you, this is not your first time here, but for those that are, Early Growth is a company that'll take you from startup to exit. Your company's one-stop shop for essential business services at every stage. From CFOs and strategic finances to accounting and human resources, we get your back office services done so that you can focus on really growing that business. Here are a couple of the clients that we work with and that depend on us. We work with Hums, Stitch Fits, Quip, and many, many more. So these are just a few of our ones here that you can take a look at. Oops, excuse me. What we like to do with you is we like to help kind of deliver peace of mind. We protect your profitability and we partner in your growth. Our biggest thing is to help you grow to become the organization that you really want to be. And much like we want to be your partner as you start this journey, we cannot do much without our partners. And we have some amazing partners on this call today. And I'm going to invite our host for the afternoon, Stephen, to pop on up, and he is going to introduce you to our partners. So welcome, everyone. And actually, before we get to that, let me scroll down to Stephen. Stephen is our moderator today. He is a business development manager based out of New York City. When assisting his clients, Stephen has a professional passion for networking, sales, and service. Prior to joining Early Growth, he worked with TriNet and Aflac with a heavy focus on group benefits, insurance products, and HR. And while helping your business, Steve will do his best to connect you with the right product, service, and partners. When Steve's not working, he enjoys exploring New York City and taking photos of his journeys. So everyone, welcome Stephen.
Good afternoon, everybody. Very excited to have everybody here. We have great participation, one of our best groups in a few months, so I'm really excited about that. Coming to you live from New York City. Along with that, I'm really excited to have both our partners here as well, and especially our guest speaker. First, I'd like to introduce a couple of our partners. One from Cushman Wakefield, we have Alejandro Alvarez. Alejandro, if you'd like to introduce yourself briefly.
Of course, thanks, Stephen. Really appreciate it. Just a quick introduction to me. If you don't know Cushman Wakefield as a firm, we're one of the largest real estate providers in the world. My team specifically focuses and leads the tech advisory practice for New York City. That means we can help, actually I'll steal one of Gina's lines. We can help you guys go from startup to exit, right? So a lot of the work we do at the early stage can be anything from finding a 4 or 5 person room within, the plethora of co-working type providers in New York City and across the country, and then building a real flexible and strategic plan to scale operations as the company raises capital, looks into other markets, and obviously grows their workforce. Again, to reiterate, as small as 4 or 5 people, as large as actually JustWorks, we did their deal about 2.5 years ago for 1,200 people in headquarters down at 55 Water. Some other large clients, MongoDB, pre-IPO, we moved them to 1633, and we continue to work with them to expand in other markets. But I think I wouldn't be remiss without saying that, hybrid is part of everybody's work environment going forward, right? We're sitting here in a virtual event. So that's part of our strategic advisory practice now too. Working with few groups that do want to have a home base in New York, but also want to have a decentralized real estate strategy, looking at, a hub and spoke type model with, 150 employees across, let's say, 10 different cities. And we leverage our partnerships with different co-working groups to do that. And then last thing I'll mention is obviously New York City was obviously very impacted by, everything relative to COVID and what's happened from an office perspective. But what that's created is a real opportunity for our clients to leverage the marketplace and really achieve some of their space goals that they might have not been able to afford or find in the market, pre-2020. So a lot of opportunities out there. If you guys know me, I could probably talk about this for another 45 minutes, but I'll pass it on to Steven and JustWorks. And if any of you have any questions, please feel free to reach out to me. Always happy to help, even if it's just an exploratory discussion about how we can help and obviously provide some guidance. So thank you again to Early Growth for hosting this. Thank you for Charles. Always great to see you again, and to JustWorks as well.
Thank you very much, Alejandro. You've been a great partner and an excellent resource for all of your clients. So if anyone has any real estate needs, we'll definitely get you in touch with them. Thanks again. Our next partner is from JustWorks, Jonathan Greta. He's representing PEO. And Jonathan, please introduce yourself and let us know how you work with early stage companies.
Thanks, Stephen. Appreciate it. So my name is John Greta. I am an accountant channel manager here in our business development division, here on behalf of JustWorks. Just to give you a quick breakdown of what JustWorks is, we are a PEO. We're a professional employer organization. We're an all-in-one solution that takes care of HR services for small to mid-sized businesses, from payroll to health benefits to compliance to general HR administration. We typically work with companies that are anywhere from 2 to 200 employees. We could obviously work with companies that are over 200 employees, but we cannot work with anyone that is under 2. But that is generally the range that we reside in as far as our employees. Just to give you a quick breakdown of our suite of services, we offer access to health benefits to small to mid-sized businesses that wouldn't otherwise have that access. We give them, large market access. We're partnered with national healthcare carriers along with dental and vision benefits. We give options for ancillary benefits to some really premier services like mental health services, 401k, community benefits, and gym memberships and other services within that sphere. We offer payroll services to W-2s and 1099s, contractors. We integrate with accounting software such as QuickBooks and Xero. Another quick, important piece of our offerings is our compliance support. So we take care of all adherence to federal, state, and local employment regulations. We do workers' compensation, unemployment insurance, ACA filings, EPLI, DEI, and harassment trainings, and we are compliant in all 50 states. We act as the co-employer for our clients, and they operate under our EIN number, but our clients own their businesses and they own all their business decisions. Obviously we could, if you have any questions, towards the end during the Q&A, I'd love to answer them, but just quickly let you know that JustWorks is the leader in customer experience in the PEO space. Our NPS score of +60 is double the industry average for a B2B software company, which is a big deal for growing businesses, because it's a great resource that's pertinent for their growth and their peace of mind. Now, the division that I'm in is that I work with partners such as CPA firms, CFO firms, bookkeeper entities, and financial advisories to partner with us. So to get their mutual clients, to get clients to be our mutual clients and get them on our platform, those that they see fit that would benefit from our services. And we offer, a number of perks to be a partner with us. Those perks include either, commissioned payouts or kicking discounts of our platform over to their clients. So that's pretty much the long short of what we do. As I said, I'd love to answer any questions that you have during our Q&A. I just want to thank Early Growth again for being a partner with us, and thanks Stephen for moderating today, and hope to speak with you all. And I'll drop my info in the chat.
Absolutely, Jonathan. We appreciate it. JustWorks has been a great partner, especially in the PEO space, coming from a similar space. They're great with early stage companies, among the best, and being in the New York City area, they're one of the strongest teams in the company. So if anyone has any questions about PEO, wants to learn more, Jonathan would be a great resource. Now, lastly, I'd like to introduce our partner and special guest speaker, Charles McCormick. Charles McCormick is the founder and has gained international recognition for his expertise in representing for investors and entrepreneurial communities and building great community companies. Charles joined Benny VC in 2017, where he's a partner. He's played an important role in recent ascendancy in New York City and premier venue capital formation for entrepreneurship. Charles in 1995 graduated from the University of Chicago Law School and has graduated summa cum laude from Fordham College in 1991, where he was elected Phi Beta Kappa. Charles, we appreciate you being here. Thanks again.
Thank you, Stephen. Thanks to you and Gina and the Early Growth team. Thanks also to Jonathan and the JustWorks team and to Alejandro and the Cushman and Wakefield team. Really glad to be here with you this afternoon and chat a little bit about the early stage space.
Great to hear. So why don't we start by learning a little bit more about you and how you got into Benny VC and recently started that.
Sure. So Benny VC came about around 2017, very much serendipitously. Wasn't necessarily what I've been planning to do. I've been working as an attorney, as a corporate attorney in the New York City area for over 25 years. And when I met Ciro Campagnoli, who's the portfolio manager at Benny VC, it was really about an initial opportunity that he had to make an investment in what became our first portfolio company. And, from there, we kind of decided, one, that we liked what we were doing. We got along well, and we saw 2017 as being, a pretty good time to get involved and to start growing a VC fund. And that's exactly what we did. It's now the end of 2021. I just checked, actually, I don't keep track of this myself. We have 25 portfolio companies. That includes, importantly, companies we've reinvested in as they've grown. I think without, overplaying it, I think we have a couple of unicorns in the portfolio. But most importantly, we are aggressively and actively looking for promising new companies to invest in.
That's excellent to hear. I know that you're actively looking, and you've mentioned many times that you're agnostic and that you prefer diversity in your portfolio. So I was wondering if you could kind of go a little bit more into that and maybe some of the areas that you work on that you find most exciting.
Yeah, sure. So, there are different types of funds. I mean, you may run into a fund that describes itself as a crypto fund, or a fund that's a life sciences or a healthcare fund, or a SaaS fund or something like that. We're a much more generalized fund. We don't have a specific mandate in any industry. That said, over time, what we found is we develop our investment strategy around certain themes. And right now, those themes tend to fall in 3 or 4 different categories. One of which is mental health. A second one would be sustainability. A third one would be equality. And a fourth would be innovation. And I think that's a pretty broad term. So what we're very interested in right now in the innovation space is anything to do with the metaverse. So, we may be able to announce an investment in the next couple of weeks in that space. We have 2 companies in the portfolio in the metaverse right now, Tribe XR and Tribe VR, and Trip, both of which you can connect with over Oculus. And we're looking forward to watching this trend develop. For me, I started before they had this thing called the internet. And as I look at the metaverse developing, it seems to me to parallel in some ways the way the internet originally developed.
Very interesting. And the metaverse, like many things, it seems like it's larger than life and growing fast. You said that there are trends developing. What type of trends do you see kind of being affected in business by the metaverse?
Well, I mean, it depends who you ask, but I think a lot of people will say it's going to affect pretty much everything that we do. My own view is that it feels to me like it's simply the next extension of the internet. And so when I think back to how did the internet develop, one of the early trends that was successful was e-commerce. And so we're seeing a lot of companies that believe the same thing and are trying to capitalize on how the metaverse can be used to facilitate and accelerate e-commerce. And a really practical example of that is instead of, if you think about it, started out, if you ordered something where you didn't go into a store, you probably looked through a page in a catalog. And that was pre-internet. Now with the internet, you would look at a picture of it. You would essentially look at a catalog picture, except you'd look at it online. And over time, that's gotten more sophisticated. And now you could probably look at, if you click on a picture, you can look at it from different views and you can focus in on it, or, sometimes you can get a 360 view, something like that. The metaverse with volumetric video capture should enable you to get a view of whatever it is that you're buying as if you're standing right next to it. And so that's the next phase that I was talking about from the internet and e-commerce. So I think that's a big trend. Advertising is an interesting trend. If you're strolling through the metaverse and you come across a sign for Coca-Cola or Pepsi-Cola or whoever it may be, or you're in a game, whatever it might be, Minecraft or Roblox, and you come across an advertisement, that's of interest to people. So those types of trends seem to be emerging. But I think maybe more generally, when I think about trends in the metaverse, the first place I would look right now, at least, is how did trends develop on the internet? How was the internet used for commercial purposes back in the late 90s? And it wouldn't shock me if there were at least some parallels with the development of the metaverse.
Interesting. So obviously, we would think that it's going to take, leaps and bounds in the next year or two. If there's companies right now that weren't using it, that were coming to meet with you, what would be your advice to them into kind of taking that first step?
Well, I think the metaverse is an awfully broad concept and it's pretty amorphous. So if someone came to us and said, hey, we'd love for Benny VC to invest in our company, I think the first thing that I would ask them is, what exactly is it that you do? So imagine that there is no metaverse. What are you selling? What service are you providing? What product are you selling? What problem are you solving? And I think I'd start at that level. And then I would layer in the particular context of the metaverse. And so how does the development of the metaverse help you do what you do? How can what you do only be done through the metaverse? Can you do it outside of the metaverse? As the internet developed, you saw this tension between online and bricks and mortar, where you would have one rather than the other. And in the earliest days, when a traditional brick and mortar store had an online presence, the two product catalogs weren't particularly integrated. And so it was like it was two completely separate businesses under the same brand. And the question with the metaverse is, what is it that you're doing and how are you using the metaverse? Because we're all just kind of figuring out how to do that, right? If you have Oculus, you can tool through the environment and you can download various apps and you can get workouts, or you can learn to be a DJ, that's Tribe VR. You can practice mindfulness, that's Trip. And there are lots of others. I don't mean to single anything out, but we're in the very, very earliest days of that. So I think what I'd focus on for any entrepreneur who's developing a company that they believe has a great application in the metaverse is just to think carefully about what exactly it is that you do, what product do you provide, what service do you provide, what problem do you solve for ordinary people.
Excellent. We appreciate that. And, obviously it's trending very much. A very similar topic that seems to be going in the same area would probably be cryptocurrency, I would say. And I would like to kind of get an understanding from you what you kind of see has changed over the last 10 years and where you maybe see the next 5 to 10 years in business going with it.
Well, at the risk of a rounding error, I think the difference between the crypto industry today and the crypto industry 10 years ago is that there was no crypto industry 10 years ago. So I think Bitcoin was out, but I mean, crypto has really taken off. And what's interesting to me is that there is a tremendous variance in very smart people's views of crypto. And it's not quite one-to-one, but whenever you read an article from someone who says, for example, Bitcoin's going to go to 100,000 or Bitcoin's going to go to 1 million, you also hear, an equally impressive and thoughtful and credentialed person saying, "Oh, this is a scam." So I don't really know what's happening. I know that if you bought Bitcoin a couple of years ago, you're probably pretty happy. The harder question is, if you bought Bitcoin today, would you be happy a year from now? And I don't know. But a couple of things I'll just point out about that, because I really, that's a topic in and of itself. But two things that amaze me are when you look at some of the crypto companies, and it's not simply crypto, it's the altcoins and it's distributed apps and the entire universe that you see on Coinbase. The coin market capitalization, which is the trading value of all the coins of a particular coin that's trading, are just astronomical. I mean, if you look at the market cap of something like one of the swap apps, I'm trying to remember off the top of my head, but hold on just a sec. Uniswap. All right. If you look at Uniswap, the market cap is like over $40 billion. It's really, it's substantial. I mean, these are companies that didn't exist 4 or 5 years ago. And so the question is, what exactly are you getting? Because these companies don't pay dividends. If someone were to buy Uniswap, the company, there is actually a Uniswap, the company. It's backed by very reputable VCs. But if you were to buy the coins, if someone were to buy Uniswap, I don't know what would happen to the coins. I don't know if you'd get anything. And it's a little bit, to my mind, like the situation we had when people who participated in the Oculus Kickstarter campaign were a little bit miffed when Facebook bought Oculus and they didn't get anything except the headset that they'd ordered. So when I think about crypto right now, the fact that it's not tied to anything, it feels a little bit to me like what we're doing is trading baseball cards. And there's nothing wrong with that. Baseball cards are very valuable. And if you held on to your baseball cards when you were really young, you could be in a really good place right now. But I think that's, to me, right now, at least, it's more comparable to what we are buying and selling in crypto than stocks. Even though I think it's more common to understand, if I just bought Solana coins, or I bought Uniswap coins, or I bought Axie Infinity coins, there's a feeling that I feel like I bought stock in the company, and I'm just not sure that's true on a few different levels economically.
Absolutely. I have my Derek Jeter card right next to my Dogecoin. So,
see? And and you'll soon turn that into an NFT, and you'll sell it on Coinbase, and it'll cost lots of money. And the price of Ether will go up, because in order to trade the coin or to trade the NFT, you'll need Ether.
absolutely. So, I mean, as you said, we could probably talk about crypto forever.
Yeah.
But I'd love to kind of go back a little bit and learn a little bit more about you. I'm not sure if everybody knows this, but you used to be a lawyer for many years.
I still am, actually. No, I still run the corporate group at McCormick and O'Brien. So the VC side really grew out of the corporate practice, which is still, frankly, quite busy. I know this is, frankly, I know that this is a forum for venture capitalists, so I'm trying to wear that hat here. But, my law firm, information about my law firm and me is available at our website, mcoblaw.com. We work with some great investors. We work with some great companies, and are happy to continue to do so. But I realize that today, Stephen, you want to talk about venture capital and you want to talk about Benny VC.
Absolutely. Well, one of my questions were going to be is, coming from that field, how do you think that's helped you with your clients or current clients now? Do you think that adds a certain value add?
Well, I mean, I like to think so. If you look at a traditional VC firm, the venture capital partners come from a few different places. I think first and foremost, you've got people who used to run companies, who had a successful event, and know how hard it is to really grow a company, and did that and achieved a certain level of success. and now just moving into the next chapter through venture capital, where they're supporting entrepreneurs like a younger version of themselves. Another place where venture capitalists come from are investment banks and consulting firms. There's obviously a quantitative side to venture capital, probably not so much as there is in a hedge fund or a commodities fund or even a private equity firm, but I think the skills do still translate fairly directly. And then the third group, I guess, would be other professionals. And, having been and, having practiced law for over 25 years, specifically in the field of private equity, venture capital, mergers and acquisitions, company formation, company operations and organization, it always felt to me that the skill set would in some ways translate, reasonably well. But, the job of a VC is varied. And so, there are some things, frankly, that I don't have a background in and don't do particularly well. My partner at Benny VC, Ciro Campagnoli, comes from a real estate background. That itself, I think, is a great background for venture capital. Any real estate deal is really, if you think about it, a venture capital opportunity. If you are smart enough to purchase a particular property in an area that is growing, you can probably achieve the types of returns that VCs look for. Also, there's a strong quantitative background to real estate. Ciro can give you a cap rate off the top of his head if you just give him two numbers. I think also there is a component to the real estate business, and this is really more on the aftermarket side of sales and marketing, that I think is a benefit to any young entrepreneur who, himself or herself has probably a tremendous core competency, but doesn't do everything. Because they're very, if you're very highly trained and highly specialized, you probably spent a fair bit of time acquiring that specialty. So if you're a fantastic scientist, you really may not have had any opportunity to study or to do marketing or sales, and vice versa. If you're a gifted sales or marketing person, you may not have a deep domain experience in coding or some of the technical aspects of an entrepreneurial venture. And so I like to think that my background is helpful to our portfolio companies, but I certainly don't solve all their problems.
Understood. Appreciate that. Another thing I wanted to dive into about your background is I know that you were involved and founded NYC Startup.
Yes.
I wanted to see if you wanted to give a little more information about that and how it developed and then where it's gone from there.
So funny story. I actually took over NYC Startup Academy, I'm going to say in January of, I can't even remember. I think it might have been 2017. And at the time I did so, it had been formed, I think, about 9 months earlier. It was a meetup. It had something like 43 members, and it had never held an event. And we did our first event, I'm going to say in February of 2017. We have over 2,500 members now. Until COVID hit, we were doing an event a month. And NYC Startup Academy's mission is to serve as a forum for entrepreneurs and aspiring entrepreneurs, largely in the New York City area, who are looking for two things. And the first thing is knowledge, to build out your skill set. And so the example that I gave is, if you're particularly skilled or gifted in one field, in one business area, but you want to be an entrepreneur, you know that you have to wear many hats, and you know that you need to gain some familiarity or at least team up with people who have familiarity in other areas. And so NYC Startup Academy is designed to give you actionable intelligence in areas that are complementary to your core competency. The second goal of NYC Startup Academy is networking, to enable like-minded people who may or may not be at exactly the same place in their journey, or maybe at slightly different places in their journey, to assist one another. And a great example of this is, someone who gets out of college, takes a job at a big bank or a consulting firm or a big tech firm, is living in New York City, and desperately wants to be an entrepreneur for any number of reasons, but is thinking to himself or herself, hey, I really want to do this, but I'm not quite sure I know what I need to know. I'm not quite sure I've got enough of a team around me. And, I've got a decent living here. I can afford to live in New York City, and not everyone can say that. So I need a little bit of a push. And NYC Startup Academy is an environment where you can meet people who are at the same place, or maybe a year or so ahead of you in that journey. And frankly, they can either validate your instincts, or they can throw up a cautionary sign that I think is also appreciated.
Excellent. Where do you see most companies go from the next step from the Startup Academy?
Well, they come in at all different stages. And so I can't really generalize, but some are, a lot of the people who come are still working at their, let's call it their pre-entrepreneurial job. And some will actually make the leap to become an entrepreneur, and others won't. Some have already done so and are just looking to build out their tool set, increase their network. Maybe actually they're targeting a specific hire or a specific skill set that they really want to meet. And it just goes from there. And so there's no particular, we're not an accelerator. We don't make promises of come to us and you'll get a term sheet at the end of the night, or anything like that. It's really more of a forum for like-minded people to exchange ideas and ideally to form friendships where they can be supportive of one another as they move along, because an entrepreneurial journey can be very lonely.
Great. If anyone was looking to find NYC Startup, they would just go onto LinkedIn or Google or anything
NYC,
like that.
Where I am, we have this thing, the internet. The internet has this thing called Google. So, I mean, nowadays, if you want to know anything, you just type it into a search engine. So NYC Startup Academy is reachable over, over the internet. And we're very hopeful that we're able to do live events in the very near future. We did our last live event in February of 2020, and I canceled the March 2020 event in New York City at the very last minute. And it was a tough decision. Now, in hindsight, it wasn't a tough decision, but it's hard to remember what it was really like then.
Yeah, absolutely. I think COVID obviously affected the entire world, and here we are.
Yeah.
So one question, that I think everyone's kind of wondering is how you've seen COVID affect the business and how it's affected maybe, businesses coming towards you.
It's a tough question to ask. I'll answer it in this way. I mean, first of all, I want to recognize what an extremely difficult time it's been for people in the direct healthcare industry. So if you're a nurse or if you're a doctor, you've gone above and beyond the call time after time after month after month for, now we're probably 18 years in. And, in our chat before this started, we all kind of acknowledged we're not really sure when it ends. And so, from that perspective, this has been an absolutely devastating time. People have lost their jobs. There's been a tremendous effect on mental health. There's been, I think, a huge decline in social health and social welfare. And I don't want to just brush that under the rug and say, oh, the stock market's up, so everything's great. So, that's really the backdrop. I think what I would say in all candor is that the business community, out of necessity, has found ways to adapt to a COVID world and has been reasonably successful at that. And from the very, very small perspective of Benny VC and McCormick and O'Brien, I would say that we resemble that remark, and I'm sure that there are plenty of other groups that have, and we're very grateful for the fact that we've been able to continue doing what we do in these really unprecedented times. But others have not, and I don't want to lose sight of that. But I think in terms of what's been going on in the business community, maybe the encouraging news is that entrepreneurship and innovation have not ground to a halt. And there are some who would say that it is, out of necessity, we've become more energetic, more ambitious, more entrepreneurial than ever because we've had to. And I've seen plenty of that and really admire those instincts. And, when I think about, guys who are just getting out of college or just getting out of business school or law school, what a terrible time, to have to go through that. And yet I think there are a lot of very encouraging stories from that area, people who have maybe not followed the path that they thought they were going to when they started college, when they started business or law school or whatever, even medical school, but have really found ways to adapt, to overcome. And, that's a lesson for all of us, because you have to do that in business. If you want to be an entrepreneur, again, on a much smaller scale than what we're looking at globally, you really have to develop those skills, that resiliency, that optimism, that tenacity. And I think we as a culture have had to do that over the last effectively 2 years, and not without some success.
Absolutely. I think everybody on the call and everybody around has been affected by it, and we're trying to claw our way through. To dive back a little bit more, I just wanted to ask, kind of, when people are looking to approach you, are there certain things that you're looking for, metrics or certain numbers, criterias that you'd like to see within a business?
So Benny VC is an early stage fund, and what that means is a few things. The saying, and I certainly didn't invent this, is that you bet the jockey, not the horse. A lot of people have heard that. Here's what it means to me. It means that, every 5th or 6th business plan we'll see is an idea for a flying car or a flying motorcycle, or a negative carbon manufacturing process, or a drug that will cure a terrible disease. You name it, and there are business plans out there for it. But the question is, do you have the team that has the vision and the discipline to execute? So that's the jockey, the business itself being the horse. And in terms of metrics, Benny VC's portfolio consists of companies that are generating revenues, I won't say hand over fist, but are, consistently, steadily increasing revenue growth. And we love those metrics. We love to see increased month-over-month growth. We love to see increased year-over-year growth. We love to see ARR growth, because those are the types of metrics that are relevant when you get to the stage of an exit. But the reality is, if you're in early stage VC, a lot of those terms are aspirational. And so, if we see a company that is pre-revenue, the question for us is not, our approach is not, well, come back to us when you're doing $10 million a year. The issue is, all right, what is your path? What is your vision? How is it that what you're doing is going to lead to revenue, which is going to lead to more revenue? And, a lot of people will say, well, once I can get this certain scale and critical mass, there'll be a network effect. Everyone says that. It's not true for most people. But, we don't have hard metrics with Benny VC. What we look for is leadership, vision, discipline, and I would say optimism. And, we love to work with people who like to work with us, because fundamentally, early stage venture capital is a relationship business. We don't look at a spreadsheet, run a few calculations, and cut a check. It's much more of a conversation. It's much more of a journey. It's much more getting to know, who a person is. I like to ask the question when we first meet an entrepreneur, why did you start this business? And some of them have absolutely fantastic answers. And those are the people we like to invest in. The people who, might have been given a research project at a consulting firm, an investment bank, and saw a trend in the market developing, and, saw a compound annual growth rate of 36.385% over the next 10 years. It doesn't really resonate the passion that we look for in an entrepreneur who wants to do something for a specific reason and wants to accomplish a specific goal with what they're doing other than making money.
Interesting. So when you decide to move forward with somebody, what can they expect, or what do you expect for them to have prepared for the next steps?
Well, there's nothing specific. What we like to see what pretty much everyone expects nowadays. The coin of the realm, I guess, if you're an early stage entrepreneur, is to have a decent slide deck that spells out who you are, what you're doing, why you're doing it, why you think it's better, why you think it's going to make money. We like to see some sense of financial component to your planning in the form of a financial forecast. And here, I think the thing to understand is we're not necessarily looking for a company that's going to hit a specific dollar metric at a specific point in time in the future, because that's generally just made up. What we're really looking at in financial projections is a thought process. And so one of the more interesting entrepreneurs who we've spoken with recently really impressed us when we first met him, because he was incredibly focused on bending the cost curve of the product that he was manufacturing. And he comes from a mechanical engineering background, and we like that. And he's developing an alternative protein. And the challenge for him, the functional challenge for him, is that the product that he was producing was extremely competitive to the extent where his cost of production couldn't possibly compare with the cost of production of the traditional product. He's producing a meat product. And he just couldn't compete with the traditional slaughterhouses in beef, pork, chicken, who can produce at so much per pound, because they've been doing it at tremendous scale for decades. So his focus was entirely on developing a process that achieved the result he wanted at a cost that was competitive. And so it was less important to us when in time his break-even point was, and more important to us that he had that focus, that he understood that more than just having an interesting idea, because everyone talks about these things right now. I mean, if you were to throw terms out like sustainability, carbon reduction, clean energy, right? Like it's not like there are people who are violently against this. And so those are just buzzwords, right? What we really want to see is, what is your method? What is your process for developing something that achieves all those admirable goals in a commercially viable way? And that's really the key question, right? Can you do so in a way that someone who is, and just use energy as an example, right? Can you produce hydrogen at a price where people are going to stop buying oil? And if you can't, do you at least have a vision for how you might be able to do so in the future? And hydrogen is a great example, right? And there's a lot of literature on hydrogen. We took a very, very hard look into hydrogen, and I don't believe we have a hydrogen company in the portfolio, and that's really much to my chagrin. But after looking at it really, really hard, I mean, where we've essentially come out is that the cost per unit is just not competitive right now with other sources of fuel, and we really regret that. But it doesn't make it not true. And so what really impresses us is someone who understands that problem and wants to try to solve it.
So I'm sure you've seen a ton of pitches come by you, or have you seen anything in particular that would be a mistake or a common mistake that people make in kind of entering that field? Or
I mean, it's hard to say, because there's no disqualifying factor any more than there's any one thing that's going to lead to a positive decision, right? I think one thing that always catches my attention is if I get a slide deck and it's got 20 slides and there's absolutely no mention of who the team is, I think that's a mistake. And so, one thing to understand is that an early stage, as an early stage entrepreneur, you are fundamentally selling yourself. And so if your slide deck doesn't have you in it, you need to go back, and if you need to take slides out, that's fine. I think that's fundamental, right? You bet the jockey, not the horse. The other, I think, trend we see that, and I understand why it's done, but isn't necessarily the most effective approach, is that, we'll receive slide decks that basically say, okay, we're at 0 revenues right now. In a year, we're going to have $1 million. In 2 years, we're going to have $20 million. In 3 years, we're going to have $100 million. And in year 4, month 7, we're going to do an IPO. We're going to do an exit. And my own view is, if you had that type of clairvoyance into the future, you should just take whatever money I give you and put it into the S&P, because you'd make all sorts of money being able to predict the future. It's not so much being able to guarantee a particular exit. And so if you have a lot of, if you spend a lot of time in your presentation talking about your exit as an early stage company, you're probably looking in the wrong area. I think I would spend a lot more time talking about my team, talking about the problem that I'm solving, talking about the way that I'm doing so that makes me different than all the other guys out there. And I think the other thing is, the other thing that really catches our attention are people who either aren't aware of their competitors or don't believe that they have them. And so as a general rule, if you have no competitors in your space, there's one of 2 reasons, right? Because you're so incredibly innovative that absolutely no one else is capable of doing what you're doing. That's one possibility. The other possibility is that you're pursuing a business idea that isn't of interest to anybody else. And that's not a good sign. And, if I were to look at the distribution of, of cases, I would say that far more fall in the second category than in the first. And so, it's very good to know who your competitors are. It's probably not accurate that you have none, or that every single one of your presumptive competitors is just, so much less capable than what you're doing that they don't even merit consideration. You can learn an enormous amount from your competitors. And, if I talk to an entrepreneur and she says to me, look, here's the 800-pound gorilla in our space, and there always is. Here are the 3 companies who we think we compete really well against. Here are the 2 companies who we always seem to lose out against, who we never seem to match up well against, but here's how we want to fix that. And here are the guys who we're able to consistently beat. And here's why we think we're able to do that. I think that's a much more thoughtful conversation than, you see these grids, these tables, and they'll have competitors and they'll have categories. And, not surprisingly, their company ticks every single box, and none of the other companies tick any boxes, or they tick 1 or 2. And, it's a nice optic, but I think we've seen so many of these by now that it loses a little bit of its emphasis.
I think that's extremely helpful information. I think you said it right from the beginning, that relationship was very important. Whether I think it's dealing with you, your own business, or even competitors, I think that you hit it right on the head. I know we're getting towards the top of the end of the hour. I just wanted to remind anyone, if they had any questions they wanted to ask, feel free to drop them in the box, and we'll get them out there. Charles, one last thing that I kind of wanted to talk about or give you the opportunity to speak about was Founder Accord. I know that was something that you had started, and I just wanted to give you an opportunity to speak about that as well real quick.
So I wrote the Founder Accord in 2016. It comes out of really an episode where, a client walked into my office with his tale of woe. He said, I had a great job, but I was consulting with these guys and I was helping them build their business. And I was really good at what I did. So I was really helpful to them, and they loved me. And they kept saying to me, look, quit your job, be our partner. We'll be equal partners, and, this will be great. And I never quite was able to make that jump, because I had a great job. I was being well paid, and I wasn't sure about the prospects with this business, but I was happy to help them. Roll the movie forward quickly. They get venture capital financing. My friend decides, well, maybe I should make the jump. I've got a great deal here in place. And he sends me, he walks in with this big thick stack of legal documents and says, is this what I think it is? And the answer is no, absolutely not. And we've seen a more dramatic version of this with Eduardo Saverin at Facebook, or at least it was popularized in, I think it was The Social Network or whatever that movie was. And I think there are other examples. Reggie Brown at Snap might be a relevant example. I used to call it a Pete Best problem. And for those of you who don't know who Pete Best was, he was the original drummer of a rock band in the 60s called the Beatles. And he was replaced by this guy named Ringo Starr. And so he's the guy who almost was a Beatle, or was almost a famous Beatle. So I used to call it that, but now I probably call it a Reggie Brown or an Eduardo Saverin problem. But fundamentally, what I'm trying to accomplish with the Founder Accord is to eliminate false negatives. And if you think about venture capital, it is really an exercise in eliminating false positives. So everyone thinks they've got the next greatest thing since sliced bread. And any venture capitalist who's honest will tell you, if I make 30 investments, there's a decent chance that 20 of them are going to go to zero. And, of the remaining 10, 5 or 6 are probably going to get me my money back. But I'm going to make my money on those 2 that really make it. So from a batting average point of view, that's not too impressive, right? If you get a hit 3 out of 30 times, you're probably not going to make the All-Star team. But the numbers matter. So, if those 3 hits tend to be, you make 1,000 times your money, then the fact that you might have lost all your money previously doesn't matter. That's why venture capital exists. But the Founder Accord is focused, so that's a false positive, weeding out false positives. The Founder Accord is intended to weed out false negatives, which are ideas for businesses that are really fantastic, that never see the light of day because the founding team doesn't have the sufficient confidence and the sufficient infrastructure to move forward with the idea. And I think, when you think about businesses, that's probably the single greatest cause of death of any early stage business. That, and particularly nowadays, right? That someone starts it as a side hustle and it gets a little bit of traction. And so they start thinking about whether I should invest more time and resources in it, whether I should invest money into it. And some will do so and it won't work out. Some will do so and it will work out. But a lot of people, I would argue even the majority of people, just will never do anything about it and will never know. And there are legitimate reasons for that, money being an important one. But what the Founder Accord is focused on doing is giving people who could participate in a really great venture, in a really great business, the peace of mind and the comfort that they need to really go all in. And that's one of the hardest questions when you're forming a company, because, you hear all these stories about, Steve Jobs and Steve Wozniak working together in a garage, or, Bill Gates and Steve Ballmer and Paul Allen, they knew each other from college, or they've been buddies for a long time. But nowadays, your co-founder might be someone you met at a meetup a month ago. And you might be working on 4 or 5 different startups at the same time. And you can't do that forever. And so how do you get to a point in any journey where you have to look across the room at your co-founders, your prospective co-founders, and say, are we going to do this or not? Are we all in or not? And it's perfectly okay if you say, look, I'm just not there. But what we're trying to solve with the Founder Accord is to give people the comfort that if they do take the plunge and they do go all in, they're not going to get screwed on the back end. They're not going to be Reggie Brown. They're not going to be Eduardo Saverin, at least with respect to that aspect of how they're portrayed in popular culture. And so that's what we're trying to do. It's been a really gratifying experience. I was again, I have this thing called the internet, and it has this thing called Google, and every now and then I'll just Google the Founder Accord. And I think I came across something a couple of years ago. There was a law school in the Midwest, in Illinois, that was holding a symposium on entrepreneurship. And one of their topics, one of their days, was the founder accord. Now, I don't know the professor who was, who was teaching it, but he did in fact have the founder accord, and apparently thought enough of it to, to include that in his symposium on entrepreneurship. I got a call a few years ago from David Rose. Now, if you're out on the West Coast, you might know the name Ron Conway. On the East Coast, I guess the David Rose of the East, the Ron Conway of the East Coast, a guy named David Rose, serial entrepreneur, very energetic guy, calls me out of the blue. I didn't know him at the time. And he says, hey, I'm doing a book on startups. I want to put the founder accord in it. Do I have your permission? And I'm thinking, who are you and how did you get my name? But that all worked out. And I published the founder accord because I wanted people to use it and I wanted people to share it. So I didn't have any problem with that. And so now if you purchase the startup checklist, which I'm told has become a best-selling business book, probably not the only one that David's published, the founder accord is featured in it. And that's really incredibly gratifying.
That's great. It sounds like an excellent concept. And, when you're giving back, it's always a great thing to create happiness and help others out as well. I know we're getting to the end of the hour, and we do have one question I just wanted to touch on. This is from Ramon. He asked, how do you see the investment environment in cannabis and CBD technology space developing? Not just the cannabis itself, but just the tech side.
Well, when you say the tech side, I guess this would be what synthetic forms of cannabis that is bioengineered to achieve certain results. And so, to me, the risk with cannabis is, this is oversimplistic, but there's two things in cannabis that make it commercially interesting. One is THC and one is CBD. As best I can tell, THC is a fairly dangerous hallucinogenic that probably has its best applications in a very controlled environment, whether it be therapeutic or otherwise. CBD, I just can't really tell. Some people think it's a placebo. Other people think it's a very effective and non-addictive treatment for things like PTSD and anxiety. And I just, experientially, I can't really back that up, but I don't know. My own sense is that the cannabis industry will ultimately become integrated into one of two or three, and maybe all areas. One would be big pharma. And so cannabis will have medicinal and therapeutic uses that are developed. And, there may be the need to bioengineer cannabis just the way we bioengineer fruits and vegetables. Someone showed me pictures of what corn and watermelon looked like before all the genetic engineering that we've done. And, they're not very appetizing looking, particularly compared to today's product. So, we could have souped up versions of cannabis products for therapeutic and medicinal purposes going forward. And then, increasingly, right, I live in the state of New Jersey, which recently legalized the recreational use of marijuana. At least I hope they did. Anyway, there are recreational uses. And to me, I think what that means is it could be picked up by big tobacco, or it could be picked up by big alcohol, the Diageos of the world. And I don't know where that's going to go, but I think, increasingly, if you go back 20, 25 years, at least in the United States, the idea of cannabis was kind of an underground activity that everyone knew about, people tolerated, but was never really going to go anywhere. And I think we've turned a corner on that. And there probably is a place for cannabis in your investment portfolio, in your business activities. But I can't really say with precision that I know what that is. At Benny VC, we've looked at a number of cannabis companies, and we have to date not made an investment in any of them. And I guess what I would say is that they fall into a couple different categories. There's I think the term they use is plant touching. And so there are some regulatory and, frankly, legal challenges, particularly in the banking industry, to, businesses that are involved in the active purchase and sale of cannabis itself. And then there are the ancillary businesses, whether that be developing, apparatus for the delivery of cannabis products, and that's just a fancy way of talking about vaping without mentioning it, or products that integrate either CBD or cannabis or elements of it, and we just haven't quite found the right thing. And I wouldn't, if we did, I'd be thrilled, but I can't say that I have yet.
Well, and with that being said, that's the best way to kind of transition to this, because we have hit our hour mark. So we're going to start wrapping things up. But if someone did have that amazing cannabis idea and they wanted to get in touch with you, what is the best way to get in touch with you? I know a lot of our participants, oftentimes like to reach out, ask some of the questions that maybe they weren't answered. So is LinkedIn the best way? Is email?
LinkedIn is a great,
Okay.
LinkedIn is a great way. I think I'm, I have a fairly common name, but I think I'm reachable over LinkedIn. Benny VC is on LinkedIn. My law firm, McCormick and O'Brien, is on the web. I don't know how active we are on LinkedIn, but I like to think I'm not that hard to find, and I'm happy to talk to people.
Awesome. So you heard it here, guys. Reach out to Charles on LinkedIn. And with that being said, thank you so much to all of you for joining us today. Thank you to Charles for being our VC, Alejandro and Jonathan for being our amazing partners, and to you, Stephen, for being an incredible host. So thank you all so much. Hope everyone has an incredible Wednesday. And like I said, if you want to share this or review it, or if you had to leave early, you're not going to hear this, but you can always check us out on YouTube. This recording will be up later this evening. So with that being said, thank you all so much, and enjoy your Wednesday.
Good to see
Thank
you.
you.
Bye.
everybody. Have a great
Bye,
day.
guys.
Thank you, Gina.
Thank you.
Thanks,
Thank
Stephen.
you. Have a season. Bye.